Now, though, time for the market report. No big surprises coming into the new year.
That's right, Mike. No big instability so far, other than weather and, of course, the Ukraine war. And we'll get into it. But first, the numbers, evenly split this week. We'll see who made the biggest impact. And then, in our road report, weather, the big talk, and it's not all bad news. And finally, December's cattle on feed report. How do we look compared to last year? So, markets evenly split last week on the ups and downs. Row crops getting the better end of it. Let's take a look. Last week's biggest loss, lumber down $13. The price now a fraction of what it was at the end of December last year by exactly $777. Last week's biggest gain, soybeans up nearly 40 cents. The reason, like most row crops, weather, harvest, international pressures, and ultimately stocks as well. That isn't to say we're in trouble. Prices still lower than June 22 when they got up to $17 a bushel. With all that said, in our row report, we dig into the three main commodities we follow: wheat, corn, and soybeans. So, how's the beginning of 2023 looking for them? In short, not too bad. Market analyst Don Roose says weather the biggest factor affecting prices. That and the harvest from Australia and South America. Their harvest is during our winter, and that gives us a post-harvest rally.
Well, I think if you look at these markets, a lot of them, including the livestock, was all about a lot of weather. And, you know, in a thin market, you can move a market pretty aggressively. But when a lot of it, we're watching the weather in Argentina. It hasn't really changed a lot, so we added risk premium. We had, back to the weather, we had transportation slow down. Very often, when you get your first big storm like this, transportation slows down and you add some weather premium to the market. Corn, soybeans, wheat with a winter kill because consumption goes up by the livestock. The big thing that you have on the wheat market is Russia continues to sell wheat below the world market on rallies. But the thing that really brought us to the upside was the winter concern. The fact that Australia had a bigger crop than we thought. They pressed us to the downside. Their harvest is basically behind us, so we're getting that post-harvest rally. And we know Argentina had a smaller crop. They're about 91% harvested. So I think it was a relief rally from the southern hemisphere, and then we had issues here in the north. So going forward, the wheat is probably going to be a switch to what happens with our crop in North America as we get into the spring. We're in a really tough resistance. We go to 685 on Friday. Every nickel up is going to be tough, and anything happens with improved weather in Argentina, and I think the market comes under a lot of pressure pretty darn quick. Our ethanol consumption production is under some pressure. Profitability just isn't there. Our exports on corn are down 47% versus a year ago, so we don't have it's all about the supply problem. That when we talk about the demand, you've got a real issue with the corn. Well, the December corn, you know, the same thing is coming under some pressure. It's all about what's going to happen with Argentine weather. Gave us a little pop to the upside. They're about 67% planted. About 15% of their crop is good to excellent versus 58% a year ago. So it's a problem with Argentina. June, July, they'll have basically their harvest. We got within 20 cents of contract highs on November soybeans, just over 30 cents away from contract high on the March soybeans. So you've had an awful lot of risk premium into the market. It's going to be a dangerous three-day weekend, because if the weather pattern changes at all, a lot of premium comes back out of this market. If you look at it from a producer standpoint, look at where we're really sitting. You know, you're sitting basically close to contract highs, areas that have been very hard to get to over history, with an economy that is still very much shaky, with Brazil that probably has a record crop, probably makes up for the loss in Argentina. The government, I just want to tell you about soybeans, where we're really at. Our carryout's running 220 now, basically 270 last year, 250 the year before that. So our carryouts aren't a lot different the last 3 years, but government's forecasting $14 this year. Last year, $13.30, but where I'm going, it was $10.80 2 years ago. Carryouts aren't that much different. We got the same thing going on in corn. It's, have we moved to a new level? For what reason?
In the cattle markets, prices still up. Looks like a good year for cattle. In the final cattle on feed report of 2022, we got a good look into why prices are what they are. In short, cattle on feed down 3%, which means fewer cattle, which means higher prices. Here's what it said. Cattle and calves on feed for the slaughter market in the United States for feedlots with capacity of 1,000 or more head totaled 11.7 million head on December 1st, 2022. The inventory was 3% below December 1st, 2021. Placements in feedlots during November totaled 1.93 million head, 2% below 2021. Net placements were 1.87 million head. Marketings of fed cattle during November totaled 1.89 million head, 1% above 2021. Marketings were the highest for November since the series began in 1996. Other disappearance totaled 57,000 head during November, 7% below 2021. And that's it for a deeper look into the markets. Hope you all had a great holiday. Looks like the markets did. We're in for an interesting year with weather and conflict still affecting prices.